I want to talk about valuations and whether the market is pricing in a too much profit or pricing in more than really is justified. What do you think?
So we think that right here, the market really is priced to perfection, meaning that it's really pricing in a V-shaped recovery. But I think we have to think about the conversation that has subtly shifted in the country in the last few days. Because what we've learned is that the Great Lockdown actually has not really vanquished the virus, but that states are deciding to live with the virus. And what that means is that even if we get a second wave, we may not shut the economy down again. And if that's the case, then we're going to choose to live with the health consequences and also try to restart the economy. And I think that's what you're seeing, the subtle change in that conversation.
So how vulnerable, Alicia, then, is the stock market? If you say it is priced to perfection now, if we start to get bad news on the virus or worse news on corporate earnings, what's the downside here?
So I'd say in the last 6 weeks, we were worried about bad news on the virus. I'd say going forward, we really have to look at what's happening with corporates and what's happening with consumer behavior. Because as you know, there's a risk curve out there for how individuals choose to re-enter the economy as we once knew it. And clearly that risk curve is going to dictate that certain actions are just not going to happen, whether it's getting on an airplane or restaurants or large stadiums. And so that really is where we're going to see the risk there. In addition, we've talked about this before, Tyler, there's a solvency risk. So while the Fed has very clearly helped with the liquidity issue, it's not clear that these businesses will survive on the other end. And we're really talking about those small and medium-sized businesses that employ close to 50% of U.S. workers. And so that's what we need to look for.
Right. David, let me bring you in here. You have an interesting way of thinking about the market today, and it's intuitively, it makes sense. You say that Act One of this crisis was the strong balance sheet versus the weak balance sheet, the fortress companies versus the ones that are more vulnerable. Now you say it is the bad economy companies versus the good economy companies, or the good earning businesses versus the bad earning businesses. Explain that. Tell me who's in one category. I can only imagine who's in the other.
Well, certainly in the better businesses, the higher quality businesses, the better balance sheets. I mean, heck, all of IT, literally all of healthcare, certainly consumer staples. And unfortunately, in the other camp, Tyler, it's energy, financials, industrials.